No one likes to talk about insurance, so I'm going to try to make this as painless as possible, but also educate you. Before we start, let's see. I want to introduce myself. First off, I brought my handsome assistant, who's also my husband. So he got conned into helping me this morning. And also, we don't have our kids, so it's our date day. You can sit down now. But that's my husband, Josiah. A little bit about me before we start, just so we're on the same page. Again, my name is Kennedy Sharn. I work for Texas Farm Bureau. That's an insurance company. We take care of home, auto, and life insurance, but we primarily like to take care of our farmers and ranchers. So when we started in the early 1900s, it was specifically for farmers and ranchers. And I grew up on a ranch. My dad is a cattle worker still to this day. I don't ranch, so David was talking about how kids come back and they don't continue. That's me. I did not continue, but my brother did, so that's great. But we're still around. We have horses. These are my daughters. I have a 4-year-old and a 6-year-old, and they like to ride horses and take care of the cows and all the good stuff. But it is so important to make sure that we are protecting our farms and ranches and our crops and everything that we have. David made some really good points on that. Prior to insurance, I was an educator, so I'm really excited to be here because it makes me feel like I'm back in the classroom. I was a teacher for 8 years and then got into insurance, and I kind of just fell in love with it because I like to help people protect what matters most to them, which is their family and their livelihood. So let's get started. I want you to ask yourself, what is the biggest risk you own or have? What is something that you own or have that's going to hurt you financially the most if something happens to it? Okay? That is a risk. That is something that we want to protect. Now, if something happened to your property, to your house tomorrow, would your farm or ranch or business survive financially? Or is it going to put you out of business? And then are you 100% sure that it is going to be protected? So, liability. We use a lot of words in insurance, and we don't really know what they mean. So that's what I'm going to do today. I'm going to explain what you're paying for and why we have the insurance and how it actually works. So everyone in here should probably have auto insurance. Legally, you have to have it. We see the words liability, bodily injury liability, personal liability, all of these things, but what is liability? Well, liability is when you hurt someone else or their property, if it's your fault. Okay? If you are the cause to an accident, you are liable. So liability protects you from hurting other people in a lawsuit. So if you hurt somebody else and they sue you, liability protects you in that lawsuit. Okay? This does not protect you from being hurt. This protects you from being sued when you hurt somebody else. That is what being liable is about. So here's an example. I call this the wall of liability. So this is the wall. This is where your liability limits would go. So think of, let's just think of your auto policy. If you were looking at your auto policy and it said the numbers 30,000 for personal medical liability to another person, 50,000 for the total accident, and 60,000 for property damage. That is the wall of liability. That's what we're going to protect in a lawsuit. So you have your things on one side. You have your family and you. You have any property that you own. You have any cash that you have saved up in your 401k, in your stocks, any cash in your bank. Any personal property that you own, vehicles, your house, any equipment, any cattle, all of those things can be taken in a lawsuit if you were to get sued and didn't have proper liability limits. So those are all susceptible to being taken in a lawsuit if you lose the lawsuit and you can't pay. So that's what we're trying to protect, okay? So here's an example. Say you had cows, okay? Cows make the most sense to me. I grew up on a farm. So my dad has a bunch of cows. A cow got out and a car hit that cow. Well, who is liable for that? Well, my dad is liable for that because that's his cow. Well, the person that hit the cow, drove off, flipped their vehicle, and now they died in this accident. Who caused the accident? The cow did. Who's liable for that cow? My dad is. So now there's going to be a lawsuit because this person died and it was my dad's cow's fault, and so he is liable. Okay? This is where the liability limits come into play. So Bobby died in this accident. Okay? His family hired a lawyer. That lawyer ran an assets check and saw that my dad had land, that maybe he had some cash saved up in his savings account. Maybe he had some stocks. He has equipment because he's a rancher, okay? He has all of these things, and they're like, oh, wow, they have a lot of things. We're going to go, and we're going to find every reason to sue them, okay? So they're going to sue him for $1 million because automatically if you cause an accident and someone dies, that's $1 million lawsuit right there, period. Okay, minimum. So freak accident, something happens, it's your fault, and someone dies, automatically $1 million lawsuit. Okay? Then they'll say, okay, we tried to save him. Those medical expenses, $300,000. His vehicle, we're going to sue $300,000 of property damage. And then the family, they were so sad, they need emotional support, $250,000. $250,000 for neglect of property because the cow got out. It sounds crazy. This literally happens all the time. So now they're suing my dad for $2,100,000. Okay? His liability limit was only $500,000. That's all the insurance company is going to cover, $500,000. So that is left with a $1.6 million need that they're suing him for, and he doesn't have $1.6 million. So what happens? They start going after the things that you own and the things that you have. That is why liability is so, so important. We talk about, you hear this in insurance, umbrella policies. What's an umbrella policy? It's an extra coverage. So his liability only covers $500,000. He's going to get an umbrella policy that says whatever is extra out of this $500,000, we're going to have an umbrella of $2 million to protect your assets. So no matter what your liability limits are, it needs to be enough to protect your assets. So if you only have $500,000 in assets, $500,000's good. But if you have $2 million in assets, you need to have something in place to protect those $2 million. Because David had said it earlier, he said it's not if something happens, it's when something happens. Most likely something is going to happen. We hope that it doesn't. Okay? So we want to protect those. So you need to have enough liability to protect your assets. If you don't have a ton of assets, you don't need a ton of liability, but you need to have enough liability that protects what you do have there. So let's talk about personal liability and farm liability. Farm liability, farm and ranch liability. But personal liabilities, this covers accidents and injuries that happen in your everyday life, not related to farming and ranching operations. So you go to the grocery store, you drop a jar of pickles, an old lady comes by, slips on this jar of pickles, falls and breaks her hip, and she says it's your fault because you dropped that jar of pickles. Sounds crazy. Happens all the time. Your personal liability, which is typically on your homeowner's policy, covers that lawsuit. okay? This is different from farm liability. So farm liability is accidents and damages that happen in a result to your farm and ranch operation. So if you had a tractor and you were driving that tractor down the road and a car hit your tractor because they thought you were in the way, okay? Your farm liability will cover that. Your cow got out, got hit, your farm liability covers that. So more examples, personal liability, someone slips and falls at your house and gets hurt, that's personal liability. Your homeowners would cover that. You have a dog, bites a neighbor, your homeowners covers that. You accidentally damage someone's property, your homeowners covers that. Farm liability, again, tractor hits a car on the road, cow gets out. If you're spraying chemicals on your crops and it gets onto your neighbor's crops and it kills your neighbor's crops and they are mad, your farm liability covers that. It protects you in that because they're saying that you killed their crops and they sue you because they lost all their crops that season because it's your fault. Your farm liability covers that. Okay, so all of these items can be covered under like one single insurance policy. Not all insurance companies are the same. So again, David made a really good point. Use your referrals, talk to the people in your area. I wouldn't just sign up for insurance online and wish for the best. You really need to talk to, especially when you're going into a farming and ranching business, you need to talk to someone who is knowledgeable in that and has background in that so you know that you're getting what you need. Texas Farm Bureau, again, we started with farmers and ranchers, and so that was our ideal client to begin with. So they have this policy, and not all insurance companies have this, so you have to ask around. But we have a policy where all of this is tied together, okay? We would protect your house and your farm and your land. So if you have 20 acres, great. If you have 5 acres, great. If you have 1 acre, great. If you're doing any farmers and ranching on that, this could be a policy for you. So it protects your house like a normal homeowner's policy. But then it protects any barns, greenhouses, all of those. It protects those, and you can get windstorm on those without having a windstorm certificate. So down here on the coast, you typically have to have a windstorm certificate called a WPI-8. And if you don't have that, you can't get windstorm. With Texas Farm Bureau, they will insure your barns without one of those for windstorm, which is our biggest peril down here. That's most likely what's going to happen down here is wind, hurricane, or hail. Flooding is a separate insurance, completely different. You need to get that through flood insurance. But we also protect equipment, your farm liability, that liability portion we were talking about. All of this is on one policy. It covers your chemical spray, your livestock, if they were to get out, get hit, any watercraft, if you have boats, any of those fun toys. All of that can be written on one policy. So you don't have policies here, and you're working with a ton of people. This is all on one. You pay one premium altogether, which is really nice. So let's talk about equipment insurance. Y'all are starting out farming and ranching. Eventually, you'll probably start getting some kind of equipment to help you. It is important that you insure that equipment, because without that equipment, if something happened, would you still be able to do your job effectively, or is it going to hurt you? Okay, is it going to hurt you financially if you lost that piece of equipment? Let's insure it. This covers if it gets lost or stolen. I don't know if you would lose it, but if it gets stolen, if something happens to it, so like wind, hurricane, hail, tree fell down, landed on your equipment, crushed it, it will cover that. And then it covers it at market value. So not the price that you paid for it, but how much it's worth that day. So if you bought a new bulldozer, it was $50,000 and you bought it 20 years ago. Well, it's probably not worth $50,000 still. It's maybe worth $25,000. So we would pay for $25,000 of it. It does not cover mechanical issues. So insurance on your equipment does not cover the mechanical, but it does cover if something happens to it because of a peril. A peril is wind, hurricane, hail, fire, things that naturally destroy something. Okay? So, we talked about farming and ranching. We talked about we need to protect our homes, our greenhouses, our personal liability is the big one. But what protects you? Okay? In the earlier presentation, David talked about protecting the income that your crops bring, but what protects you who are making those crops happen? Okay? So if your income stopped today, how long could your farm or ranch or business keep operating? If something happened to you today, how long could your family keep going? Okay? Can it survive without you? Can you survive without your spouse? Financially. So, would your family have to start selling everything to manage financially if something happened? Or could it keep going? Is your farm or ranch or business set up to be passed on or paid off? Do you have a slush fund ready to go if something happened, if you got sick, if you got in a car accident and didn't come home? What's happening to your business or your farm and ranch? Have you talked about that? Is it going to survive if something happened to you or your spouse? So that's what we're about to talk about. So you have insurance on your tractors, your equipment, you have insurance on your greenhouse, you have insurance even on your crop that's making you money. But what protects the income that pays for all of that? Without all of that, without you, all of that wouldn't happen. So let's protect you, and we do that through life insurance. So my handsome assistant's going to help me here. I have, this is called a needs analysis. It's a little thing we're going to do to figure out what your need is. He's going to come by if you want to pass the papers on the end across. And then if anyone needs any writing utensils, I have pens. Or if you just want a pen, they're pretty nice. I can pass those out. Anyone want a pen? They're really nice. They might have a red tip on the end. You got to take off the plastic tip. Anyone else? I'm a pen girl.
Thank you.
There you go. Anyone else? Yeah. You want one? You want a pen? Anyone? Anyone? Yeah? There you go. Okay. You want? There you go. Yeah, no problem. Y'all want a pen? Yeah. There you go. Anyone else? I have lots of them. More in the back. Do you want a pen? Yeah. We're going to go over all of this, so you don't need to fill out anything yet. We'll go over how to fill this out. Everyone have a paper and a pen? Need a pen? Just want a pen? Yeah. Oh, sorry. Did I mess it up? No, I don't. did I put the pins on something and I set it on there? Oh. All right. This is a little activity we're going to do to keep us awake. So this is a needs analysis. We're going to figure out how much financially you actually need if you didn't make it home. So if you're driving home today, you got in a car accident and you died, which we hope does not happen, how much will your family need financially to keep going? Okay? You want to put your name on one side. The other side is going to be your spouse, if you have a spouse. Okay? Because if something happened to you, you would never see that money because you're not here, but your spouse will. If something happened to your spouse, they'll never see that money, but you will, and your kids will. So we're going to fill out two. You're going to fill out one for you, and you're going to fill out one for your spouse. Okay, the first section on this paper is your burial and final expenses. If something happened to you, your final expenses are due almost immediately. Okay, this is something that they're asking are the first cash needs your family faces. So do you have this cash ready to go, or is your family going to have to take out a loan just for your burial expenses? Okay, this typically covers your funeral, any medical. Typically, younger people, they die in a car accident. That's the most statistically proven in an accident. So how you get to death, we're going to pay for that too. So it covers your funeral, your medical, and then any estate settlement cost. Statistically, this range is $25,000 to $50,000 today. So if we think 20 years down the road, 50 years down the road, it's probably going to be $100,000 just to bury you. It sounds crazy. Have you had to bury someone lately? Do you know how much it costs? It's expensive, and they want this almost right away at death. Okay, so we're going to allot some money in this section, on the burial section. We're going to put an amount of money that you think you might need to bury you. So I say $25,000 to $50,000. I want you to write it in that space. Whichever one you prefer, what number you think you want to allot to final expenses. You're going to put this on your side. You're going to put this on your side and your spouse side. It's going to be the same number. All of these are going to be the same number except till we get to here. So you're going to put an amount for your burial. Anywhere between $25,000 and $50,000 is what I think you would need. Statistically, what you should probably need. That's what you would put there. Okay? The next is your mortgage. Do you own a home? How much do you own on that home? Do you own a barn? Do you own the field that you're doing your crops in? How much do you owe on that? If it's paid off, great. If it's not, how much of this? So we want to keep your family in their house, in their home, as much as we can. Because if your son or daughter, I'm thinking of my son, my daughters, if they were to lose one of their moms or dads, I want to keep their life as normal as possible. I don't want to have to sell my house because I can't afford it. So I want to use my life insurance money to pay off my house so that I could stay in that home. Okay? This section, it determines what it would take to pay off your home completely, to keep your family in that home. And if you don't own your home, maybe put an amount there for your family to buy a home. Okay? So if you don't own a home, and if something happened to you, the best idea is you want your family to be able to buy a home, put how much you would want to allot to purchase that home. Okay? Notes and loans. Any personal loans that you have, we want to make sure we get those paid off. Any auto loans. Do you own your vehicle? Do you own on that vehicle? We want to pay that vehicle off. The idea is to make everything paid off so you are financially free if you lost a spouse or if your spouse lost you. Because I know if I lost my spouse tomorrow and we didn't have life insurance, it would be real sad. And I would have to sell my house and I'd have to sell my cars. So this is so we can pay off everything that we need. Okay, so any loans that you have, we want to make sure we get that paid off. Student loans, auto loans, personal loans, any debts, any farm loans, any equipment loans, we want to make sure those are paid off. And then the next section is college education or trade school. If you have small kids, which I do, and something happens to either me or my husband, I want to make sure that I can pay for my kids to go to college. So I want to allot some money to make sure I can get them through college or trade school. My husband didn't go to college. He went to trade school. I went to college. So we're open to either so that they can be successful or to even start a business. Typically, a 4-year degree for college for 4 years is about $124,000 per student total in a state school. Okay? College is just expensive. So I want to allot money so my kids could go to college if or when something happens to me. Here is where it becomes different on your paper. So you should be filling out the same on both you and your spouse until this point. The income replacement. This is really the most important part. We talked about income replacement for your crops, but let's talk about income replacement on you. How much money, and it's going to be opposite for you and your spouse. So if you ask me how much money of my husband's do I depend on, I'm going to say all of it. I depend on my husband's income, but I would like all of it all the time. And then for how long do I want it? I want it forever, but let's be realistic. I monthly might depend on $3,000 of his income. I need $3,000 a month to survive of his income. How long do I want it? So $3,000 a month for a whole year. I need $36,000. If something happened to my husband, I need $36,000 to survive comfortably as I am today. And then how long do I want that $36,000 coming in? Well, I want it, I would say forever. I want it coming in forever, but that's not realistic. I want it coming in until my kids get out of school. So I depend on his income, and I want it for 10 years, till my youngest daughter gets out of school. Typically, we do 10 times the income anyway, so how much do you depend on your spouse's income or your family depend on yours for 10 years? So you're going to do it, I depend on it for $3,000 a month, so I multiplied it by 12 because there's 12 months in a year, and then that equaled $36,000 annually, and I want it for 10 years. So my need is $360,000 of his income. I need $360,000. This is going to get me through 10 years. Okay? This is going to make sure that I can pay off the ranch or the farm so that I don't have to sell it. We can keep producing. It's going to buy me time to grieve because I just lost my husband. I don't know about you, but like I love my husband so much. If something happened to him, I don't think I would be able to go to work on Monday, or maybe a month from then, or maybe even a year. This buys me time to figure out what I want to do. Do I want to keep ranching and farming, or do I want to sell the business and move to, I don't know, Oklahoma? I don't know why I would want to live in Oklahoma, but move off and travel the world. This buys me time to grieve and figure out what my next steps are. Or it allows me to hire someone to help me on the farm. to help me on the ranch until I can get on my own 2 feet again. Okay? So this is a really important piece because you and your spouse are a team on this farm and ranch, and we want to protect that. And then the last section of this is total enforced life insurance. If you currently have life insurance, great. Put the amount that you need on that line. If you already have it, great. If you have 200,000, great. If you have $1 million, great. Put it on that line. We can subtract it from your need. Okay? If you don't have any at all, then the answer is 0. If you have it through work, I say that's a bonus. Okay, that's a benefit. You're not guaranteed that money. Okay? So, life insurance does 3 things. It replaces your income, allowing the farm and ranch and business to continue operating. Then it pays off your debt, so nothing has to be sold off. So you're creating automatic equity in that business or in that land. Okay, so we're going to pay off your house or pay off your land. Well, now you have equity in it. So if you want to keep going, you can. If you want to sell it, you get that profit out of it because it's already paid off. Okay, or if you want to use it as collateral to get an investment property, you can because it's paid off. There's equity in it. And then it provides your family with time to grieve, time to find out what you want to do next without having that financial pressure. Okay, it takes the financial pressure off. You're gonna be taken care of. You don't have to worry about money because you're already worrying about crops. You're already worrying about how you're gonna feed your family. You're already worried about how are you gonna pay the mortgage. We're already worrying about all of these things. You probably need counseling. Your kids probably need counseling. Now we have to worry about money. No, we don't want to worry about money. This makes sure that we financially don't have to worry about money and we can take care of all the other needs. Okay, so here's the last step of this little exercise. Thank you. At the top of the page, I want you to write your first and last name and write your phone number underneath if this is something that you need. And then I want you to add all those needs together. So if you go back, I'll go back. I want you to add all of these together. If you have some enforced, subtract that from your need. If you don't have any, you don't have to subtract that. And then you're going to write your total number here at the bottom. Okay? That is your need. So once you add up all of those things, if you don't have this need in cash right now, then the need is getting some kind of protection so that your business and your family can continue if or when something happens to you. Because we all will die one day, just depends on when. That's not a question, we will die. So, subtract your needs that you have, and then I want you to ask yourself, if something happened to me or my spouse tomorrow, would my family be able to survive financially without life insurance? If so, great. You don't need it. If you don't have that money and your business or your ranch or your home isn't going to survive, then there is a need for it. Okay? So, here's the goal. Protect your income, protect your farm and ranch and business, and then protect your family. Afterwards, I'm going to be over here. If this is something that you have questions on, I would like you to drop those needs papers off. I can reach out to you and talk about that. But if you're just curious on insurance, I do have a QR code here. You can follow my page. I do a lot of educational videos on my Facebook page of insurance in general, and I'd love for you to follow for that. I also have some pamphlets on homeowners policies, auto policies, all the good stuff back there, so I'll be around for those. Do you have any questions for me, David? Sure.
During your presentation, thank you for your presentation. It was very informative. You had mentioned that the insurance does not cover equipment mechanical issues.
Correct.
Is there some type of insurance for covering a tractor that breaks down,
So that's going to be your warranties. So when you purchase those, they'll offer a warranty. That's what covers mechanical. Mm-hmm.
Second question is, most of our producers here have probably 1 acre or less.
Mm-hmm.
And they probably have a tractor, they probably have some of these equipments you listed. Can you give at least a range of what a cost of insurance might be?
It's not black and white. So it depends on your risk, what you have. If you just have an acre of land and no barns and stuff on it, we would cover liability of that land. It's all dependent on what you're trying to protect. You're probably looking average, probably looking around 900 to 2,500 a year annually in insurance. Maybe less depending on what you have, but I cannot give you an exact.
Understood. Yeah, that's helpful.
Mm-hmm.
And then the last question I have is, a lot of different insurance companies offer some of these services and coverage as well. Can you maybe provide a couple of differentiators why, Texas Farm Bureau Insurance as opposed to
Sure.
Geico?
Yeah. A lot of us, and I see a lot of people, they just shop around for the cheapest option because insurance is really hard to pay for because we don't see it. It's not something physical or tangible, but when we need it, it's good to have. Sometimes we may never need it, but when we need it, we want to make sure we have the right thing. If you go into a big company that you're not having a personal relationship with, so let's say Progressive, you're just a number. You're paying the cheapest. You're going to get the cheapest service. So they're going to give you a 1-800 number. You're going to call. You're going to make your claim. They're going to find every reason not to pay you for your claim. If you didn't disclose something, if you didn't say it the right way, if you had a scratch on your vehicle that you didn't tell them about, they're going to try to find a reason not to pay you out. You want to go to your local insurances. Some of our local insurance agents, they brokerage out to the cheapest option, but you want to find, I don't want to say mom and pop, but reputable insurance companies like David was talking about earlier, referrals, people that have worked in the same industry with you, who they use, because you want to have that one-on-one relationship with them. Texas Farm Bureau does really great, and I'm sure other insurance does really great. But for us, we check in with our clients annually. So I'd call you up and say, hey, Sue, it's Kennedy, checking in on you. Has anything changed? Let's sit down and review what you have. And we'd go through it all over again. And then the next year, we'll go through it all over again to make changes where we need to make changes. But you need to be having a conversation with your insurance agent at least once a year. So if you have insurance now and you don't even know who your insurance agent is, that's probably not the right place for you, okay? Especially with having a business or crops, you want to make sure you're talking to them on an annual basis so that when something happens, you know that you're going to be taken care of. Because you're already paying for it, you might as well pay for something that is going to take care of you and make sure it's correct. Yep. Sure. Yes. Mm-hmm. So we do. Yeah, we have a policy where we can include your home in it. We have a policy that we can exclude your home out of it. So it's just dependent on what you have, how we would write it. But yes, all of it would be protected. Mm-hmm. The windstorm is the tricky part because they exclude wind, hurricane, and hail on houses, and we write that through TWIA, or the TWIA. But we can write your barns through Farm Bureau. It's a whole thing. But yes, the short answer is yes. Mm-hmm.